AI data centers are the new hype, and Applied Digital is positioning themselves perfectly to be at the start of this growth period. And they just reported earnings, and I want to talk about it. So let's get into it, okay? If you don't know what Applied Digital is, it's a company that builds AI data centers, and they also host hyperscalers who want to use the compute for their businesses, right? I've been talking about Applied Digital for a little bit, and I have a video that talks a little bit more about what they do. So if you want to go watch that, I'll link it here. But they just reported earnings, and they beat on both the top and the bottom according to analyst expectations. And so we can see EPS, they beat by 81%, and revenue, they beat by 2%. So although the revenue beat wasn't crazy, the EPS beat was a lot better than analysts were expecting, okay? So why don't we talk about their earnings report? I was able to listen to the call, not live, but just a few hours before recording this, just to get a good idea of what they talked about. And I got really excited about the earnings call that they did. It made me even more bullish on the name, so I might have to go buy some more come Monday. But basically, here we are. It says revenue is $38 million in this quarter, up 41% year over year. So although $38 million isn't a ton, like I said, they're in the beginning stage of their business, and so seeing 41% year over year is really impressive. By the end of next year, I think that number will be double or triple that, and I'll explain why. But and then also net loss attributable to common stockholders, $26.6 million, down 25%. So they're still not profitable, and the reason they're not profitable is because they're building these AI data centers. And so it takes a lot of capital to build them. And like I said, they're still closing deals on hyperscalers who will take the compute from their data centers. This part right here is super exciting to me. So we saw a huge run up back over here when we heard about the CoreWeave deal. It went from $6 all the way up to $15 at the end of its run. And this was because CoreWeave had announced, Applied Digital had announced a deal that CoreWeave was going to lease up to, why don't we look, 250 megawatts of data center leasing over 15 years, and that deal was going to be worth $7 billion, okay? $7 billion is a lot when you're seeing that these revenue numbers right now are $38 million per quarter, okay? So $7 billion over 15 years. They also gave CoreWeave the option to add an additional 150 megawatts of power, which would bring the total capacity to 400 megawatts. And so adding that extra option would be $4 billion extra. So altogether, $11 billion over 15 years. And what CoreWeave decided to do was actually go forward with that additional option. So I ran the numbers a little bit, and in my first video about Applied Digital, I talked about it a little bit. But basically, the first CoreWeave deal that we got was $7 billion over 15 years. That's $465 million per year, which is $115 million, and these are rounded down, but $115 million per quarter. Okay, really great deal. Now, with the additional option for the extra $4 billion, we actually get $11 billion over 15 years. That's $732 million per year, or $183 million per quarter. Okay, so we just saw that they made $38 million per quarter, and because of one deal from CoreWeave, they're going to be making $183 million per quarter. I don't know what their payment structure will be like, but in general, we can kind of run the numbers, and so that's a whole $150 million extra each quarter. So, and that's just from one client, which is amazing. So I want to read a little bit of this to you guys. It says, these long-term leases mark a defining moment for Polaris Forge 1. one of North America's most ambitious data center projects. Polaris Forge 1 is their data center that they're building right now. This part says, purpose-built for artificial intelligence and high-performance computing, the campus combines massive power capacity with rapid deployment and is designed to scale up to 1 gigawatt. With the first 100 megawatt facility scheduled to be operational in Q4 2025, a second 150 megawatt facility scheduled to come online in mid-2026, and a third 150 megawatt facility planned for 2027, we believe Polaris Forge 1 will serve as a launchpad for the future of AI infrastructure. So at the end of this year, they're going to have their first facility online and running, and CoreWeave will actually be able to start using that. So we'll be able to start seeing some significant revenue increase probably by the start of next year, 2026. He goes on to say, the CEO, building on the momentum from these leases and the surging demand for AI infrastructure, we're actively marketing our multi-gigawatt pipeline to a diverse group of customers. Over the past 2 years, we've streamlined our processes, enhanced our building design for greater flexibility, and established a repeatable approach supported by a strong supply chain. As a result, we've reduced projected build times from 24 months to 12 to 14 months, which we believe will enable us to deliver large-scale projects faster and more efficiently. So they are decreasing the time to get out their product by half, which is insane, right? From 24 months to 12 to 14 months. So if they can pump these out in a year, they get a deal. A year later, they have an AI data center built. They'll be able to reproduce this a lot faster and a lot better and make more money, basically. So that's really exciting to me. Their goal is to generate $1 billion in annual net operating income, okay? And so with one deal, like I said, like I showed before, in one deal they were able to get to almost $500 million per year in revenue, which is really exciting because they're discussing with already a few other hyperscalers. And he also stated that they're in discussions, like late stage sales discussions with 2 other hyperscalers or 2 other customers. And so one deal, $7 billion. Imagine how many more deals we could get for similar amounts of money. This thing could go to, 10, 20, $30 billion market cap. And right now it's only at a $3 billion market cap. So it could 10x in the next 5 to 10 years with more deals. He kind of talks about it here. He says, besides CoreWeave, we have completed the diligence and onboarding process with 2 other investment-grade North American hyperscalers. This is an accomplishment that cannot be overstated. That's really bullish. We have learned over the past 2 years that the onboarding, internal approval, and contracting process with hyperscalers is longer and more complex than originally anticipated. We believe that the market-leading experience gained from this process in signing our first leases will benefit us as we continue to gauge potential tenants and execute on our pipeline. So he basically says that they're kind of in talks with 2 other North American hyperscalers, and that kind of sounds like they're kind of close to coming up with a deal, I don't know how close, but it sounds like they're kind of far along in the pipeline. He also says, we also expect to benefit from this competitive advantage as new entrants to the market confront the time, money, and effort it takes to overcome these industry syncretic barriers to entry for other players. So basically he's saying that with the AI data center boom, we might see more companies wanting to build these for their own company, for clients of their own. And so they'll need to find somebody who can build these data centers if they don't have the capital or if they don't know how to. And that's where Applied Digital comes in. They're the ones that want to build the data centers and make them cooled, energy efficient, cooled for the GPUs, strong enough to handle all the compute, etc. They're in the early stages of their business, but we can see that there's momentum ever since the CoreWeave deal. It probably put them on the table for other hyperscalers to reach out to get interested in building data centers. They did a Q&A, and a lot of that Q&A is really great. I'll link their website down below so you can check out the earnings report and the call if you want to listen to it. But the Q&A was really good, and a few people asked the CEO some questions. And I want to share at least one of them with you guys right here that I really liked. Basically, the analyst asked about the hyperscaler negotiations that they're in talks with, and basically the CEO said, we're having ongoing discussions with 4, 5, 6 of the hyperscalers for the campuses that we're working on, both in the Dakotas and outside of the Dakotas. So they're currently working on their different facilities that will host CoreWeave, but they're also looking for other tenants to pay to use that compute. And so, it says they're in advanced and ongoing discussions and negotiations with these other hyperscalers. So, like I said before, this is a long-term play, and so we're very early in the AI data center play. APLD, Applied Digital, is a little bit more of a speculative play, but really it's not at the same time, because we're getting deals. As long as they continue to execute and actually get deals, close deals with even 1 or 2 more hyperscalers, it'll kind of legitimize that they have a product that people want. And I think from there, the momentum will keep going. So, the stock moved quite a bit off of these earnings because of kind of what I talked about. They're in talks with other hyperscalers, and they closed that additional deal with CoreWeave. So we see, it jumped from $9 all the way up to $14, and then is down because of the overall market. So it might sell off a little bit if we get a dump over these next 2 months, but this thing will most likely move more with additional deals that are substantial. And so the earnings might be kind of the same until the end of the year, start of next year, where we'll be seeing a greater demand and increase in revenue and in basically their product. So during this year, I'll be kind of building out a position, and hopefully over the next 3 or 4 years, they'll just add more clients and the stock will continue to increase. And over here, we can see that it's at a $3 billion market cap. If they're making, a few billion dollars in revenue each year, then this could, easily go from a $3 billion market cap to a $30 billion market cap. So although it is a little bit more on the growth speculative side of stocks, I think it's a really good opportunity here. Now, this isn't financial advice, but for my portfolio, I'm going to buy during this consolidation period and look for the next 2 or 3 years to see if they can execute. Now, if you want a more established, more expensive AI data center play, then I definitely recommend checking out Oracle. And I might do a video on Oracle here in the next few weeks because I really love Oracle, and I'm really bullish on the AI data center build out. And so for me, I'm investing in Applied Digital and Oracle. Oracle is my safer play. Applied Digital is more of my cheaper but higher risk, higher reward play. Overall, I'm extremely bullish now after listening to the earnings call. I'm even more bullish on Applied Digital, and I think they can execute as long as they get more deals. And so from the sound of it, sounds like they are in talks of deals. They just take a little bit longer to flesh out the details, and that's okay because my time horizon is a few years, so I have time to wait. And in the meantime, I'm going to build up position. Please do your own due diligence. This is not financial advice. You need to do your own research and see if this is right for your portfolio. If not, I'd recommend looking into Oracle as a safer data center play. Okay? Thank you guys so much for watching, and be sure to subscribe for more.